Hi. Welcome to another Investor Web video. Today we'll expound on the term equity. Equity is a term used to describe the ownership of a company or asset. Equity generally refers to the amount of money or value that a company has after all debts have been paid off. It can also refer to the total ownership held by investors in a company, usually expressed as shares. Equity is important because it allows investors to share in the profits generated by a business and to receive any residual value if the company is sold or liquidated. When investors purchase stock in a company, they are essentially buying a portion of the company's equity. Equity also describes the amount of money or property owned by an individual, minus any debts owed. In other words, it is the difference between the assets and liabilities of an individual or business. Equity is often used to determine the value of a business for sale. For more explainer videos, subscribe to Investor Web.